Hey guys, welcome back. Today it's Wednesday, June 24th, and so far the market's been mixed, but under the surface it's been a really important rotation day. The Dow is green, bonds are catching a bids, airlines are ripping, and defensives are working, but the Nasdaq, technology, semiconductor, and a lot of the AI adjacent software names are still under pressure. So it's not really a simple risk on or risk off tape. This is a market where investors are selling the most crowded AI and tech areas while rotating into airlines, industrial staples, healthcare, utilities, and long bonds. So let's jump in to the indices sectors, a few of the biggest stock stories, the market weather report, and then talk about a few the trades that we've been watching and what's coming up tomorrow. So quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. So please hit subscribe to follow. And thank you so much to everybody who has subscribed, liked, commented. I'd really appreciate it if you could subscribe. And if you comment, I get back to everybody. Leave some tickers you'd like to go through, any macro that you've been watching, and I get back to everybody. So first, let's start off with the macro news from today, so we get a good backdrop for what's going on. And that first big story is oil. So crude's been falling hard as the market's repricing in less geopolitical supply risk after the Iran conflict, and so that's helping airlines because lower crude means lower jet fuel costs, but it's hurting energy stocks as you would expect. Um, and so the second big story is rates, and long bonds are catching a bit today. We were talking about TLT a lot yesterday, and we can go look at that trade, but we'll get to that in the trade section there. And that tells you that the bond market is starting to price in a little more relief, but tomorrow's inflation data could change that very quickly. So it's something to be on the lookout for. And then that third big story is the continued AI and tech repricing. If we go to the NASDAQ here, we can see that's down 1%. Was down even more earlier, but I'm actually seeing a nice little reversal here at that level. We'll get to that in a bit. But that third big story is the continued AI and tech repricing. And it's still, the market in general is still questioning valuation, AI capex, and whether all of this infrastructure spending is going to turn into earnings fast enough to justify the multiples. If we look at stocks a little down again, five, or if we just actually SMH, and we'll get to that in the sectors. So now let's look at the individual indices. If we look at SPY, and I'm doing this live just to make sure I get it because I am here at work. So I just wanted to do this again for you guys today. SPY is down at the moment about 1/4%, so not too bad. It was down further today at one point, and QQQ was down a lot more. It was at like 1.25%. Now it's just down 0.9% basically. IWN, on the other hand, is flat to slightly up. It was up a little bit more earlier today. The Dow is holding up. It's flat to slightly higher. Same kind of story throughout the day. And then TLT was one that was overperforming quite a bit here. And this gap up is rather massive in TLT. Not that it doesn't happen, but happens a lot less frequently to get moves that large. And if we look at this on the daily, you can see what's happening here. And we'll do an analysis of this when we get into the actual trades. And so a lot of the reasons for these moves today is that the market's not just selling everything, it's selling specific crowded areas. And this is what I was talking about yesterday, looking at the SPY filling in that gap while other things start to pick up would be a really great sign here. Obviously, it's not great if you're invested in the broad index only. If you have a buy and hold S&P portfolio, maybe that's not your favorite day, although this is normal market mechanics. Although when we get to the forecast, we're going to talk about what's happening right here because this is something to watch out for. I'm sure you all know what I'm about to say. But yeah, so it's selling specific crowded areas. Nasdaq is weak because of AI, semi, and tech are under pressure, but the Dow is slightly green, and small caps are holding up better. And TLT, of course, as I said, is rallying, so yields are coming down. And the main headline takeaway is this: this is a rotation tape. Tech is weak. The broader market is not completely falling apart. And in fact, when we get into the individual sectors, you'll see that a little bit more. So healthcare really was the outperformer on the day. Consumer cyclical was up, consumer defensives were up, industrials were up, utilities were up, real estate was slightly up, financials not so bad but down. Communications similarly not so bad but down. It really depends. It still is a stock picker's market at the moment, and that's often what you hear at these points of market volatility. You'll hear the news anchors saying that, and they're not incorrect, but that's kind of a catch-all that not everything's going up. Technology, as you can see, obviously got hit the hardest. Basic materials got hit pretty hard as well, and then of course energy is really down quite a bit. But depending how you're diversified, that may not have been a bad thing for your individual portfolio. And so the sector map really explains the day better than the individual indices do. And technology is that clear weak spot, and energy is getting hit because oil's falling. I know it sounds repetitive, but just to see that same thesis play out on the indices as well as in the sectors, you are going to get me repeating that a lot, but it's helpful to think about it in those terms, a little bit of a top down there. But consumer discretionary is still strong, industrials are strong, staples are strong, healthcare is strong, utilities are strong, and real estate is slightly green. So that tells me that investors are not just running for the exits, they're reallocating their capital and they're rotating out of those high multiple AI and tech exposure and into parts of the market that either benefit from lower oil, lower yields, or more defensive positioning. And that's very constructive for some of the plays that I've been positioning into for the long term. So, because they were based on valuation discrepancies I was observing. And so the market weather report today, before I get into the actual individual uh, forecasting, is that it was a little bit cloudy for tech, sunny for airlines and defensives, and very sensitive to tomorrow's inflation data. So it is actually going to be hard to give that full weather report when we think about what's coming out tomorrow. So back to the stock stories of the day, because there was a lot of them. And the big theme was that the market wasn't just trading the indexes, it was trading those very specific narratives I was talking about. But the first one is Micron. So let's just pull that up here. Let's look at it on the daily. Maybe it's more helpful if we look at it on the hourly here, so you can see how some of that move played out. And as you may recall, I have only normal trading hours on. I don't have extended trading. So you can actually see how big some moves are. Micron may not be the best example because it didn't have a huge gapper, although we gapped up and got rejected right here at the pivot point. So that's actually a very compelling. Sometimes I don't watch the news. I watch the reaction to the pivot points because those are the institutions being set up for the day. But anyway, Micron and the semiconductor complex in general. Micron reports after the close, and because memory chips are such a major part of the AI infrastructure story, I think the market is using Micron as that key test for whether AI hardware trade still has earnings support. And that matters not just for Micron, but for an NVIDIA. I mean, if we look at NVIDIA's chart today, that was not looking so great, falling below some support that we were looking below 200 with a bit of conviction there, closing strong, having a hard time regaining it. But these are smaller time frames, so I wouldn't read into that too much more quite yet. And was starting to look at some short puts on Nvidia personally. But anyway, AI hardware trade still needs that earnings support, and it's not just Nvidia; it's also AMD, Broadcom, Western Digital, and the broader semiconductor space. And I really do like to look at SOXL for this because I feel like there's a lot of leverage in the system. So just looking at SOX or SMH isn't quite as compelling to see the crazy behavior in SOXL and specifically in SOXS for me as I'm using this as a hedge for my portfolio. The second big story was Cerebras. Let's see if we can get there. Right. Sorry about that. And it got hit hard despite strong, because they reported last night after the bell. And they, got hit despite strong earnings revenue growth because the market didn't like the margin outlook. And, that is part of the bigger story today. AI stocks are not being abandoned, but they're being judged much more harshly, obviously, because they had quite a run, price to perfection or exuberance. So if you're missing on guidance, you're going to have a real problem there. And so the market's not really willing to pay any price for anything with an AI label anymore. And then the third big story was airlines. And we'll get to that because we were talking about American Airlines yesterday for a different reason. So it was really great to see that play out there. I don't like to make predictions. That's not how I trade. But it is nice when you mention something and the next day it does well, because oftentimes you mention something, the next day it doesn't do well. But airlines, specifically American Airlines here, and they rallied because of oil, as I mentioned. Oil fell sharply, and the lower oil means lower jet fuel costs, which can be direct tailwind for the airline margins. So energy stocks are getting hit. The airline group was one of the cleanest beneficiaries of that move in crude. And then the fourth big story were the home builders. If you look at XHB, a little bummed I had been investing in them over a period of time and had recently walked away from that trade. But so that's the cost of protecting your capital. But home builders and housing related names in general. So builders first source was one of the stronger S&P movers today. But we could just look at the ETF here. And it's because treasury yields were helping them. They were helped by the lower treasury yields and strength in the housing trade. And there was also a lot of legislation going on there, which is an interesting part of that, but I don't want to get into that. This video will be very long. But when the yields come down, the market immediately starts looking at housing affordability, mortgage rates, and housing sensitive equities. I wonder how IYR held up okay there, not helped quite as much as the home builders. And so then that fifth big story was Sunrun. There we go, run there. which surged after announcing a new data center power initiative with Renew Home and Tesla. And that's the kind of story the market still wants to reward because it connects energy infrastructure, AI power demand, and distributed power generation. So it's an interesting to one to watch. My particular play is TE on that, which has been holding up okay. I have a very large position in a few accounts and selling some cash secured puts on that. But these plays are much longer term for me. So I don't want to really get into my trades on those. The other one to talk about was Hertz. If I can, I can't remember the symbol of there we are, HTZ, because this was I'm not invested in it personally, but this was a pretty big story because it got crushed after weak demand commentary and fundraising plan. And that's the other side of this consumer story. You know, airlines are being helped by oil, but rental cars are not getting that same kind of bid because the market is worried about demand and balance sheet pressure. And then a seventh story. I know these are a lot of stories today, but Alphabet, if we look at Google right here, which was, you know, it had news today that it's set to join the Dow Jones Industrial Average, replacing Alphabet. So that's really kind of an interesting one. You know, that it's symbolically important because it makes the Dow a little bit more tech heavy and shows how the market's definition of blue chip has changed. So I thought that was really interesting. It didn't have as big of a move. I think that this may have been priced in already, but just something to be aware of. And I thought it was one of the bigger stock stories that I'm sure a lot of people didn't see reflected in the chart, so to speak. And then FedEx had whoa, it's actually having a nice little recovery here. But it was another major name in focus after the earnings because even though the company beat on some expectations, investors were focused on the profit outlook and the impact of the FedEx freight spinoff. So the big takeaway from all these stock stories today is that the market's rotating, you know, as we already talked about, but it's also becoming much more selective. And that's back to that stock pickers. Uh, Market, if you will, and it's still willing to reward strong narratives, like the airlines benefiting from lower oil, Sunrun tying into power demand, and housing names benefiting from lower yield. So it says to me that the news does matter here. There's still a sentiment play, and that's interesting because when certain sentiment plays start to fall apart, you wonder if it's no longer going to be based on that, if it's going to be based on actual earnings, if we're going to come back down to earth and evaluate stocks differently. But it does say that there is still going to be some news catalysts that are respected. But it is a punishing anything, but the market is punishing anything with valuation risk, you know, weak margins, balance sheet questions, or unclear AI monetization. So that is still very real. And it also makes me wonder about, you know, news catalyst pops, how they may sell back off. Because one thing I like to watch is how things react to or stop reacting to news cycles. So, for example, when we're talking about Microsoft, when they, oh, and this is looking actually really good. You may not know why I'm going to say this is really good, but we're going to talk about, even though it's falling, it's about the complete a pattern I really like. But for example, when Microsoft stops reacting to bad news, that is going to be a really interesting tell to me. So now let's jump into the actual trades that we're watching. All right, so some of the trades that we're watching, American Airlines, we called it out yesterday just on based on the weekly and specifically based on the monthly because we really like this. The crossover hasn't quite happened yet, but we had a huge pop on this today. I was thinking about taking profits. I only accumulated two call options on this over here, so there's some more upside I'm looking for. I'd actually like to break out of this monthly downtrend and then take some profits, wait till it comes back down to retest the breakout of it. So that's the way I'm personally thinking about that. Again, not investment advice. This is just how I'm trading the market. So I don't think we need to go further into that one because we were watching yesterday. You can go back to yesterday's video if you want to learn a little bit more about how I was thinking about that. But essentially, this crossover of the 20 moving average and the 50 moving average on the monthly combined with the weekly breakout as well from this trend line was a really great signal to consider it. And I bought some really long dated leap options on that. So the next one is Microsoft. And so Microsoft had a bad day. It was down 1.39%. Right now it's down 1.62%. But when I started preparing my notes for today, it was down less. But what I was actually really interested in looking at, and I said it's starting to complete this pattern I was looking for, which is right here. I was expecting that if we fell, one of two things were going to happen. Either we would close the gap from yesterday because we left the gap when we gapped up, and that was where this pivot point was. And we did find some support there, but I thought we may rebound there. And that would start, if we came back above to the highs of the day, that would start to confirm that we're changing the trend. The other thing I was looking for was this RSI divergence. So I am on the hourly now, and we've seen RSI divergence since last week. So this Friday was lower, but price was higher. Price came lower. Now the RSI is getting higher. Price came down again. RSI is getting higher. If we get a lower low down here, which we may get towards the end of the day, that would really feel it would defeat a lot of people who got in on this trade when they started seeing these sweeps going on and the recovery yesterday. So I think we might be flushing out some weaker hands. And there's few things that could happen right here. One is that we could hit this pivot point, and we actually found support here, and people are getting in right there. And this is actually an equal low, or maybe a slightly higher low, but this is the true bottom there. The other thing I was looking for, and I'd be more compelled to add to it, because you can see I have a very large position in this account, but very long term. And I have a few call options and a few different other accounts. But I wouldn't be compelled to add until we sweep this. And if we sweep this and RSI is higher than the last time we were here, I'm going to very much like that play. And so it remains to be seen. Like I said, I'm recording this before the end of the market. Just wanted to point that out because this trade is not over for me. And I'm also investing in Microsoft for the long term. And I do want to clarify again that if you're watching YouTube to take trades, just don't follow it blindly because you don't know what people's time horizons are, what their risks tolerances are, where their take profits are, where their stop losses are, where they're going to rebalance, all of that stuff. And also for everybody who's new here, I have a website called alphaharmonic.io that I run, which is to help quants build out trade architecture to mark those things like their level, the risk, how much capital they're willing to allocate to a trade, time horizons, pairs trading, all of that good stuff. But now let's jump into the next stock that we're looking at, which is ServiceNow. So ServiceNow held up a little bit better than Microsoft from a structural standpoint. It is down, 2.19%, but it didn't actually reclaim yesterday's lows so aggressively. It's holding the support. It's doing what I was thinking Microsoft may do, where you're filling in that gap there and you're holding. And so it is holding nicely. Also, the other thing that's more compelling here is this fib right here, this Fibonacci retracement. Let me get rid of the actual active trader here so you can see a bit more of the chart. And if we go to the daily, this has been drawn out there from the swing lows that happened in March or April up to the highs that happened at the start of the month. We've come down in perfectly to this 78.6 on the fibs, held it really wonderfully, and are now just consolidating around that range. So when I say it's doing better than Microsoft technically on the charts, the technicals are looking good. Microsoft, not as much, especially this rejection there. So I wouldn't be surprised to see a little bit sweep. And it's not impossible for this to do that full retracement because, like we were just talking, ServiceNow has held the 78 retracement on the fibs. When you lose that, it becomes very high probability that you're going to retrace the entire move. So there could be a whole lot more downside pain in Microsoft. So it's just something to be cautious of. Hopefully, everybody's been sizing accordingly to know that these things could happen. It's still a very compelling entrance for me, especially where there's very, very little structure here. So by the time we rebound later in the year, I expect also, if we want to talk about cyclicality, June is known to never make new highs in the market. And so I wouldn't really expect Microsoft to be recovering. However, going into July, it's a lot more common for that recovery to happen. So I could see this be the source of, no structure. I wouldn't call it a squeeze necessarily because I think this may have been institutions de-risking and repricing rather than aggressively shorting. So I wouldn't see this as a short squeeze necessarily, but I do think with this lack of structure, it would be very easy to start to recover through that. Plus, I'm watching this trend line right here, which we've been surfing a few times, came back down in. People would have assumed that we would rebound, but we didn't. So I am looking for that first as my first tell that we're starting to pick up some momentum. Even though this was supposed to be about ServiceNow, that was a little bit about Microsoft as well. And the bull case about now is that it can become a mission critical enterprise AI software platform. I've been talking about that quite a bit. And the bear case is that the market is questioning whether AI compresses software pricing power, especially for companies that already trade at elevated multiples. But for now, what I would want to see is it stop making lower lows, of course, and stop making lower highs, just stop making lowers. It doesn't need to explode higher immediately. It just needs to stop acting like every bounce gets sold. That's really what I want to see for the longer term conviction. And I'm starting to see that a bit. I'm seeing indecision candles here right around a fib. So that to me says there's probably absorption happening there, which is what I like to see. It says that maybe some of the institutions are seeing value right here. And so then let's talk about the next trade that we were watching, which is Salesforce. So Salesforce is trading around 152 right now. It's basically, it was flat on the day when I started. Now it's down about 0.5%. But the intraday action matters more than the percentage move when it's oscillating like this. I want to see what's going on. And I'm seeing, again, a bit better structure than Microsoft and even ServiceNow here. We had noticed some reversal signals previously, and it's doing a good job not going down. So like I just said, I don't want to see everything get sold off all the time, every rebound start to get punished. So I am starting to see more consolidation around here, more absorption around here. And so it's a trade I'm watching because I am invested in a long term. And yesterday I also put on a leveraged ETF play on it. And actually, I'm kind of curious how that is going on Active Trader. It's still about flat from yesterday, which is one of the reasons I assume we might still be trading flat. So I really do like this. I have the video that I released over the weekend about leveraged ETFs and the misconceptions surrounding them, how to trade them, how to use them to your benefit. And this is a play where I will be doing that essentially as we recover. I won't be adding shares except on red days. I may add some shares, and then on green days, I'll be taking off those shares to mitigate the rebalancing effects that happen with leveraged ETFs. But I'm also going to be pairs trading this, and that is something I don't want to get into on this channel because I'll be isolating factors. I want to zoom in essentially on the alpha that exists for CRM, so how it's going to outperform its peers there. But I just wanted to show this because we were talking about it recently. Another trade I did want to talk about was Pfizer. So there was a lot of news going on there today, but it's something I'm invested in on the long term here. And we started to see a really great pattern. So I got a few messages about it, which was about Morningstar patterns. And because right here we had on the hourly, we had a Morningstar pattern start to form. You had this bear candle followed by this is actually called a dragonfly Morningstar, where you have this dragonfly doji. It's not a true dragonfly, but it's pretty close. This indecision candle has a nice long lower wick to it. And so it is bullish in nature. And when I started getting messages about this, this candle was about to close above it. So all I'd have to say there is, just make sure these things truly prove themselves and they're the most bullish version of the pattern that you're looking for, and then wait for them to prove themselves. So the same thing with like CRM when we were talking about it. What I had said the other day when we found this candle right here, which is still amazing to me, especially if it holds, is that I don't find this to be truly compelling until we actually do the thing that it needs to do. And I believe that it may have done that because we're looking on the hourly time frame here, and it closed above, and then it came above it. It tried to come back down right here. You can see that this wick tested it, and we came back up. Now I'd want to see continued motion there, and I'm not going to say it's going to hold in the long term and be the bottom. But you can see that the super trend has even confirmed once that happened, actually confirmed it here for other reasons. The super trend's a little bit more subtle than that, but it does confirm our thesis that maybe we are now in an hourly uptrend. So this is a compelling point for me. However, I will say, and I mentioned this before, is when you have these really long descending patterns like this, like a really long trend, the first time you get a reversal on a lower time frame, like a 1 hour, it doesn't generally mean that you're just going to skyrocket back up. In fact, that was one of the most interesting parts about this is we entered the 1 hour trend here and just sold off, never came back into a green uptrend on the 1 hour. And now that we've done it, I expect that maybe we're going to oscillate between green and red. And in fact, if we look at that maybe on Microsoft, you could see what I'm talking about. No, that's not a good example of it. A few names, you will have that back and forth between green and red before you actually find a true trend. Having a hard time finding that, but you'll see it's more likely to get oscillations of those lower time frame patterns. In fact, maybe a better way to see it is if I lower this down to the 30-minute, you could see on, let me go back to CRM. I believe we started to have, these were such terrible trends. So you'd probably have to go further down. And that is really what caught a lot of people off guard, was that you never got that, these are mechanical sell-offs. And I covered that in another video, but they just rode VWAP the entire way down. So if I go to like a 20-day or 30-day here, you can see that there's a sell program that's going all along this 20 SMA, and it tends to correspond with the VWAP. So right here, it's this purple line or fuchsia line. Every time it hits it, the institutions are selling. Every time it comes back to it, they are not going to sell. They're going to wait till it hits it, come back down. They're trying to get the best fill price for exiting this position. And they generally do the same thing on the way back up. And I am starting to see some green on the screen. And let's see how their VWAP performance is. Again, we're back on CRM here. It looks like they are buying below. It's coming down, they're buying below. So it is possible that we could start get some more buying, but like I said, I expect some more digestion, accumulation, absorption, consolidation, what have you, at this level before we see a new trend. Um, and then the last trade I'd like to talk about is TLT, because we were watching this very closely. And so we talked about one of the reasons we thought this was happening today, but the other reason was purely from the technicals. We looked at this on the weekly, and this is like so textbook. However, I would say, look at what happened the last few times it popped above there. Right. And so, what I really want to see in order to have conviction in this for the long term, because bonds are a little bit different to trade than your normal momentum plays, is that I want to see a red candle close above this trend line, followed by a green candle that takes out this green candle. And then I will feel that the trend has started to really begin. And I'd also, on the weekly, like to get outside of this super trend on the downside. And if we look at it on the monthly, I think we started to see some really nice reversal patterns. I would actually want to see this green candle close above the previous red candle to start to look at that. And again, candlestick charting is not my preferred way to do it, but I'm really am liking that. Oh, one last trade I'd like to cover is Uber. So Uber, we had a huge pop up today. Somewhere in my portfolio, I am carrying a few contracts of Uber right here. They're in the green at the moment, but I am holding on to them after this pop up for a few reasons. One, the thesis is going to take a lot longer to play out. If we look at this on the daily, if we don't close above 73 right here, which is a fib level I've been watching very closely, and if we don't get into a daily uptrend, I don't feel like my thesis has played out yet. So I don't want to just take profits on these yet. The upside target for me is about 80. Then I'll start trimming a little bit, and maybe I'll reallocate if we fall down. But these are leaps. And again, not trade advice. This is just how I'm trading the markets, and I'm just showing you a few of the positions I'm holding that had remarkable moves today. Yeah. So, oh, one last play. People are asking about certain ones is NVO. So I used to trade this quite a lot, but if we look at it on the on the weekly, we're having a very similar thing to the airlines here, where we had this massive downtrend on the weekly, and we finally broke it right here, but I don't have any other confluences that I really like about it. So to me, this is just the start of a signal there. I'm not jumping into this trade. And pharma and biotech, all of those things require a little bit more insight, but there is a lot of action going on in pharma right now, a lot of news happening, and people think that biotech has not actually seen the flows that it should be. So it is a place that I am looking, but I'm looking to do it in, as you can see, I have a position in Pfizer, for example. And one of the reasons is because you can see here that the dividend yield is 6.3%, and that's going to change as the stock rises or falls. But it's enough. I've calculated it's enough to offset the volatility. You can see here I have these fibs. It's enough to offset the volatility I will see even if we fall down to the lower fib. So this is essentially an extension on the retracement, meaning the next likely place to go now that we've reclaimed this whole thing. And so I am willing to hold this for a long time because Pfizer has a lot of fundamental issues, but I do like the valuation here. Cyclically, I like it. We're oversold on the daily. There's a lot of great things happen. I am seeing some type of capitulation here, followed by like that doom candle you see sometimes in a Wyckoff accumulation zone where everybody's here, it sells off, everybody thinks it's going to be okay, and they buy, and then they get wiped out, and then the institutions start to accumulate there. So just something I wanted to point out. So that's enough of the trade ideas and trade watch for today. All right, so now let's look at the technicals on the SPY, essentially the weather report, although it's going to be brief because we have PCE tomorrow. It's hard to do any type of forecasting, but what we can do is look at the technicals on the SPY to get a sense of what regime the broader market's in. And I mentioned this a few days ago, actually maybe 2 weeks ago, that once we lost the 20 SMA on the daily, I was no longer interested in trading in certain ways because it generally comes with heightened volatility. And in fact, you could probably feel that in your own portfolio. Stocks are ripping, stocks are dumping, stocks are recovering. Large cap tech is dumping, it's recovering. Just a lot of volatility going around here. And that's actually not abnormal when you lose the 20, especially after such a large run. You can watch other measures of it, just like watching the VIX. But I do like to filter by where we are relative to the simple moving averages on the daily and also on the weekly. The weekly is a very large one that I tend to read as well. And we haven't lost anything major there, but that's really important on big stocks, like when we're talking about Microsoft losing the 200 on the weekly, that kind of thing. It gives us a lot of data. Uh, but on the SPY, when we're looking at that daily, I don't like the general momentum trend following strategies when we're below the 20 for most stocks, unless they have clear breakout patterns, like we were talking about in American Airlines or even Uber, which we have been talking about, because it's just not the best conditions for them. There's some major things that could happen at this juncture, which I don't want to get caught up in, because a large part of the move in some of those names is beta, meaning the market effects on them. So let's look at what could happen, because I don't know what will happen, but I want to know what am I going to do if certain things do happen. And tomorrow's PCE. So the first thing I want to look at is the pivot points, because this tells me based on today's volatility and how much we move. So the price action and the volatility, and the price action and the volatility from the day before, where we're going to go. And the reason it's from the day before is because today's expected moves, and again, these aren't options expected moves, that's a different thing, are based on what happened yesterday, what the expected move was, how far it moved. So those pivot points are essentially price action and volatility. And we can see tomorrow that because today's price action actually ended up trading within a very small range, although it was volatile, tomorrow we have an expanded range here. And to the lower end here, if we look at it, we can go all the way down to easily 715. And that's also the top of this Fibonacci retracement, which I'm not sure what that was marked out on, it was marked out on some initial breakout. Maybe it was on the weekly or monthly, but it is funny because I don't recall when I drew that. Uh, but when you see an expected move or a pivot point lining up with a fib that you've drawn out, it becomes even more interesting to me. And so I am watching that for tomorrow to the downside. SPY essentially level wise, 724 could be a problem, and 716, 715, and then 713 if we want to overshoot it a little bit. I would not be surprised by that move. To the upside, the interesting part about it is two of the pivot points to the upside here, these are called the resistance levels, essentially R1 and R2, are still within the 20 simple moving average. And even if we get above to the R3, which is generally less likely, we're still going to be in a daily downtrend. And in fact, that would be a lower high. So a lot of times what happens is we get up to those moves, people think it's going to continue. Once they pile in, it doesn't take much for those stop losses for these trades to get hit and then cascade down. So I would be watching that very closely, even if we recover. So the way that I tend to play PCE, if I was going to be trading long, so sometimes I play futures on these, is I'm going to wait till tomorrow finishes, and then I'm going to see what happens Friday on the open and try to trade the pivot points on Friday open. Again, not financial advice, just how I trade the markets there. So that's about as far of a market forecast or technical analysis I'd like to do today on the SPY, because tomorrow is going to be a very big day. So that's the market recap for today. And huge thanks to everybody who subscribed, commented, liked. It really means the world to me. And please subscribe if you haven't. It really, really makes a difference to me. It makes making these videos worthwhile. As you see, I do it during regular market hours. So I'm taking time away from my own trading, and the support is why I'm doing this. And also because it gets me thinking about these trades better. I've been doing it for a very long time. I love sharing my knowledge with everybody. And if you're new here, please do subscribe. I do regular market recaps, new trade setup ideas, as you saw a few. Those were recaps mostly, but there are a few new trades I threw in today. Let me know in the comments if there's any tickers you'd like to see, any trade setups you're seeing you'd like me to evaluate, or any macro concepts you'd like to cover, anything really involved in the financial markets here. I love talking about this. So thanks so much to everybody. Happy investing and stay safe out there.